Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us at the MarketSite studio, we have Eliott Chun, partner at Architect Partners, to discuss the M&A environment, trends, and initiatives within the digital asset space. Eliott, it's great to have you with us. Welcome to TradeTalks.
Thanks for having me, Jill.
You got it. Let's talk about Architect Partners' third quarter crypto M&A and financing report. What data was analyzed for that?
Yeah, and we many times try and analyze what is the state of crypto. We ask that question. You have the market cap of Bitcoin, you have the market cap of crypto as a whole. We take a look and contribute by analyzing all the M&A transactions and the private financings that happen throughout the quarter. So this year, we're obviously at the low ends of the trends. That's not surprising. A couple of interesting things to take. First, from an M&A perspective, we're down almost 50% year over year. A couple of reasons driving that. Number one, valuations haven't reset. There were some pretty large valuations that were raised in 2021 and 22, and so there's still a big ask between buyers and sellers. From a private financings perspective, we're down close to 28% year over year from total capital raised, and a little bit of that is driven by number one, metrics are different. People were looking previously at how big is your team, how big is your tech, how big is your TAM, how big is your idea. Now investors are looking at what customers are buying your product, what are they paying you for, and how much are they paying you for it. So a lot of the KPIs that investors are looking at have changed, and that's some of the findings that we found.
Right. I mean, I would argue that could be a good thing as well, not just for the crypto space, but for the private markets in general. Well, how is this quarter different from previous quarters?
Yeah, I mean, I think the biggest difference that we're seeing is the investor discipline and the acquisition discipline, which you allude to, we believe is going to lead to better outcomes for the industry, which we think we need. And in previous quarters, I don't think we had that going into this. And so having that leads to operating discipline, all the people that are building companies and the founders that are leading those companies, that has increased as well. So the combination of the two, different from quarter to quarter, different from year over year, which we think will lead to better outcomes.
How much of an impact do you believe the regulatory environment, particularly in the U.S., it's having in the crypto M&A space?
It's significant. Most buyers are afraid of having a binary outcome on something that they acquire, which is a 0 or a 1. And in the current situation in the U.S., we don't have regulatory clarity on what can be done and what can't be done. So it remains a very significant barrier. And you see that in the number of transactions that we call bridge transactions, which are traditional companies acquiring blockchain and crypto-based companies. That number is at an all-time or near all-time lows today. So that regulatory clarity and that overhang is affecting itself in these important bridge transactions.
Yeah. Do you think sentiment could improve for your fourth quarter report? Are there any areas that look more promising than others?
We think the global market participation is something that you and I were talking about earlier. This technology is global, and the market participants that are announcing not just experiments, these are now products live with customers, is a big indicator of what's to come. Now, they're still early, and we're still very early in those stages, but the who that's participating is going to drive M&A activity. It's going to drive investment because you have many that have built solutions that now are being used by major institutions. That's going to attract real dollars and real investment into the space.
Let's talk about that. We've seen digital asset related initiatives from PayPal, HSBC, JP Morgan, to your point, the massive global institutions. Do you think the trend will be traditional financial institutions will start to dive deeper into crypto, or perhaps think about integration with digital assets more so than us versus them?
Yeah, it needs to be integrated. The future does need to be integrated, and you can see that with announcements from groups like the PayPals and like the Franklin Templetons and Wisdom Trees. Today we had a JP Morgan and Barclays and BlackRock announcement on a collateral use case. So we need to have the combination of these. We need to have traditional institutions participate in order for the blockchain and crypto industry to continue to evolve into its next phase.
Yeah. Let's talk about that a little bit more. ETFs, right? You're getting a lot of traction in the news with that as well, providing access to the crypto asset class. How transformative do you see that being for assets such as Bitcoin and Ethereum?
So our industry needs to do two things right now. We need to rebuild trust and enable broad and institutional adoption. one would say that an approved ETF in the US would help with both. It takes away a lot of the unclarity in the educational stuff of what is a tokenized this and what is a stablecoin that. And it also allows many of the people that are at home listening to this to say, hey, I trust my Fidelity account, my XYZ brokerage account. I'm comfortable with using that. This is what the ETF will solve for. It allows many of those that feel intimidated to participate in this asset class and gives them a familiar way to get involved. And that's one of the most important things that we need to be doing as an industry. This also helps solve a big part of the demand problem that the asset class has. And with that, the promise of increased demand, more market participants, and increased user adoption.
Yeah, well, then you have build versus buy versus partner versus invest, right? Those are 4 key areas that the space is focused on. How do you envision architect partners advising in that type of role as the industry builds out?
Yeah, I mean, one of the things is you can't fake being in the industry, but you can get faked out if you're not in the industry. And that's been one of the lessons that we've learned throughout the great purge of 2022, regulatory overreaction of 2023. You need somebody that is fully dedicated to the industry, that lives this 24/7, 365, to understand what the technology is, how it's being used, the history of how a particular product evolved to its current state, and what is getting traction today versus what is not. And that is where we can come in and really help provide a differentiated perspective.
All right, Eliott, appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.